Good morning. First of all, thank you very much for the invitation to Fasecolta. And yes, it is true that as you become more important, you talk about the things you don't know about. I will go back home feeling very important because in this specific issue of mobile insurance, I think that is an issue that we have not accomplished, at least while I was in the Ministry of Treasury. We not get to the detail of financial inclusion. We were dreaming the financial inclusion in the Ministry of Treasury, and we wanted to create greater access, especially through transactional service. And the idea was that then we would come in a deepening process where one could reach new financial services. However, all these issues seem to me the nicest aspect of public policy in which I have been able to participate. So I thank you very much for the invitation. And please continue inviting me to events like this. I'm going to take 5 minutes before introducing our guest in order to talk to you about why I believe that this issue is basic and why it's one of the most important issues of public policy in which I have the possibility to work in the Colombian case, as it corresponds to me as a policymaker. It is the local context, the one I'm more interested about, basically for the fact of the high level of informality that Colombia lives in. The struggle against poverty is linked to the struggle against informality, to try to overcome it, because this informality has per se the seed to perpetuate. Somehow it's like this bad weed that the more it grows, the more difficult it is to eradicate. And the financial inclusion is an opportunity that goes beyond a discussion where we wanted certain people to have access to certain services. In my personal opinion, really, it is a beautiful tool to close the gap that exists between formal and informal workers. Yes, financial inclusion maybe will not make people leave informality, but it reduces the cost to belonging to that informality. Informal population is usually vulnerable population. We are all vulnerable, actually, because life is that way, but as wisdom of the people says, when people have lower income, where informality abounds, well, typically the events and the contingency are more likely, and there are no mechanism for that population to protect itself, so that they can transition these contingencies without these contingencies having devastating effect on other aspects of their life, which precisely are those that make this condition of informality to perpetuate. Vis-a-vis a contingency, children have to leave the school, and we have left, and we lose investment for the next generation to overcome that informality. And I mention this example because financial services are probably the tools of coverage that has been developed, that has been invented by humanity in order to protect itself from this kind of contingency. Mr. Botero was talking about the markets and the fact that it's a set of institutions, the majority of them regulatory institutions. I was thinking that the term market has been offended by many people because they are people without souls and do terrible things. But really what they do, they try to solve basic problems for the welfare of the society, and especially the most vulnerable society. So it is a huge paradox that those who more marginal profit or who the greater use could have of these financial services are precisely those who typically are excluded from their use, and are excluded on the one part because the costs are high in some cases, and because their own lack of information and knowledge makes them not be able to access these kind of services. And it is precisely the recent development in technologies and the ICTs what has enabled us to dream that there will be massive reduction in the cost of access and a change of model in the way we think in the transaction and the coverage of these vulnerabilities, which allows us also to generate information around this population that will overcome the gap of access. The most obvious case is the credit loan. An informal person normally doesn't have access to loan or credit because there's not enough information on his payment capacity. And this is not a discussion of a bank without any soul that doesn't want to give a loan to a low-income person. It's a bank that is protecting the deposit of its public, and also has the duty to protect a client who, if exposed to a creditor without payment capacity, would be excluded and reported, and probably that customer will lose faith in the advantages that formality offers, and maybe for the likelihood of one we may lose many others. So this discussion on information is not a trivial discussion, and I would like now with that link to make a comment specifically for this audience. We have discussed issues on inclusive insurance, agricultural insurance in the past, and however, so especially in the case of agricultural insurance, the emphasis I saw in the discussion is that we had from the public policy subsidized the premium, and I would like, without order, offer an idea that seems important for this discussion. In reality, the public good that has to be built is information. Without risk information, without a mapping of what are the losses, I'm sure that our friends will talk about what are the losses for which this population needs coverage, which are not the same probably that I need. And we won't be able to calculate premiums. And if we're not able to calculate premiums, to think on whether we subsidize or not the premium is sort of jumping a logical step. And so the first step, I think we should take advantage of the technology of information communication, is gather what big data offer us in terms of information, risk information to which this vulnerable population is exposed, their loss history, so that the industry can provide a service under the technical condition that it should be provided. But here you came here to listen to the experience of our guest, so I will proceed to introduce them to you. On my right, Mr. Gustaf, I won't pronounce his last name because it's more difficult than saying to Maiguashca. You may hear him pronounce his own last name. And CEO of BIMA. He has a title on business administration in Stockholm University and a master's degree in the Royal Institute of Stockholm. He is in charge of executive director of BIMA, being responsible of the development of strategy and relationship with investors. He has been director of the mobile product, the head of global marketing, and as director of the European telecommunication Tele2. I will give him the floor to Gustaf, and then when we get to the Peter presentation, I will introduce Peter. So you have 10 minutes, and welcome.
First of all, thank you very much for that introduction. I don't speak Spanish, so I have to do this in English. So as I assume was said, I'm Gustaf Agartson from Sweden, and I'm the CEO and co-founder of BIMA. Before I get into my presentation, I want to thank you for the invitation to this event, and also thank you for taking the initiative to speak about this topic. For us, of course, it's extremely important that we get more attention to mobile insurance, and it's a great honor to be here invited as a speaker. I will speak about BIMA and what we have done to date, the results that we have achieved, but also what we have learned along the way. And after that, I will also cover what I see as most important things that need to happen to increase the insurance penetration in the world, and especially then through mobile technology. But before I go into specifics about BIMA and what we're doing, we'd like to take a step back and show you this slide around what the actual core problem is when it comes to insurance in emerging markets. In my view, it's obvious that everyone needs access to insurance, to financial protection. However, there are a few reasons why people don't have that today. I think one of them is education around insurance, why they need it, understanding of exactly how it works and how they can get it. And there's also an issue around trust in general, especially in emerging markets. There's a trust issue when it comes to insurance companies. And another key issue is payment collection. If you sell an insurance policy and you collect payment from customers on a monthly or weekly basis, that becomes very expensive unless you have a cost-efficient payment channel. And that hasn't been the case in the past, so as a result of that, also premium goes up and the product becomes unaffordable. However, if you look at the actual opportunity for mobile insurance, I think this is something that you're all probably aware of, but I think it's worth showing again. That we have across basically all emerging markets an insurance penetration of 70% or more, a mobile penetration of 70% or more, whereas the insurance penetration is just 2%. So I think it's quite obvious that this creates an enormous opportunity for mobile distributed insurance, if you get it right. So just to put some more numbers on this opportunity, there are right now 4 billion people around emerging markets that are not covered by insurance today. And again, more than 70% of them have access to a mobile phone. So this means that it creates a $40 billion opportunity for insurance. And what we have seen from BIMA's experience is that the demand is there. If you can just get a product out there that is priced the right way and where you have a cost-efficient payment collection, people are prepared to buy the product. If you look at BIMA and where we are today, so BIMA is basically a mobile insurance provider. And that means that we work in partnership with mobile operators, and we sell insurance to their customers using the mobile operator as a payment channel. We're today together with Microensure, the leading mobile insurance providers in the world. I think it was mentioned that there are services like this are in a bit more than 30 markets. BIMA is in 15, and I think the rest of them are mostly covered by Microensure. So I think we together has basically developed this industry of mobile insurance. So what we do is that we sell insurance like life insurance, health insurance product, and we collect the premium through prepaid airtime, mobile money, or through customers' postpaid bills. We launched our first product 5 years ago, and as I said, we're now in 15 markets, and to date we registered more than 20 million subscribers on our product. What's been key to our success in our business model, which is an agent-led model, which means that even if customers are paying for their insurance through the mobile, even if registration happens through the mobile phone, and even if we communicate to customers through the mobile, there's still an agent force there that educate the customer around the product. There are different ways to distribute insurance through mobile technology, and I think Peter will speak more about the electronic distribution model later on. But we employ more than 3,500 agents across these markets, and these agents are actually full-time BIMA employees, 100% dedicated to sell our insurance products. And we're growing on globally with around 500,000 customers every month. what's been key to BIMA's success is our partnership model. So we form partnerships with insurance providers, basically local licensed underwriters in each market, and mobile operators. We also work with banks and MFIs, but that's much smaller scale. So the key to our success has been the partnerships that we have with mobile operators. And on this slide I have listed our key partners. If we take these partners and sum up their total customer base, it's actually more than 1 billion people. So through these partnerships, if you look at these partners on the global level, we can actually provide 1 billion people with insurance. So our 20 million subscribers registered to date is actually a quite small share of the overall opportunity that we have within our partnerships. If we look at our footprint in Latin America, we have 4 markets here. One of them is Brazil, that's recently been launched. That's a pilot project that we're doing together with Vivo, Telefonica. In Latin America, we want to expand further, and we want to invest more in the region. We have the partnerships in place, so there's more markets for us to launch. In some of them we need some changes in the regulation to happen, so that's something I will cover later on, what we actually see it is that needs to happen for us to successfully continue this expansion. If we look at our business model and what we're doing in the partnerships with mobile operators, our pitch to the mobile operators and also to the insurance providers is that we offer an end-to-end solution. So that basically means that the partner signs agreement with BIMA and we take care of all the operational activities. So we design the product, we develop the technology. Neither insurance companies nor the mobile operators needs to invest in any new technology to make this work. That's something that we do on our side. I already mentioned the distribution, but in each market we set up agent network in the field as well as in call center, and through that we can guarantee volume. We also have a quality assurance process, which means that we do surveys on our agents to measure their ability to educate customers on the product, and we also incentivize our agents based on customers' understanding of the product that they bought. And finally, we also do the claims process. So if a customer wants to make a claim, they give a call to BIMA and we process that claim that is then signed off by the underwriting partner. I'll show you one example of a product that we have developed. If you look, remember from José's presentation earlier, he mentioned something that was called freemium, which is basically a hybrid between free and paid insurance, where the customer receives an insurance cover based on how much they spend with the mobile operator. So it's a loyalty product, but the customers can also pay an extra fee to increase that insurance cover. And this is a product example from Ghana. This product was actually developed in partnership with Microensure. So myself and Peter developed this product in 2010, 2011. But I think what's important to mention here that is key to make mobile insurance work is also how we break down the payments. So even if you have a monthly fee of, let's say, for example, $1, the way we charge the customer is that we break it down to daily installments that are deducted from the mobile airtime. So what we try to do here is really to create micro payments that are where we make the payments as small as possible for the customer to make the product as affordable as possible for the customer so that they don't have to pay any bigger amounts up front. If we go back to the, as I mentioned, we have an agent-led model. So what's key here is for us that this is our way to guarantee that we reach volume. We can control the distribution network, we can control the size of them, and we can control the agents and their productivity. And we have seen across our market that each of our sales agents can get a productivity of up to around 20 new policies sold every day. So that's how we can make this financially work. In a typical market, we have around 150 up to a bit more than 500 agents that sell our product. As I mentioned earlier, they're located in a call center or out in the field. And the purpose of these agents is partly to sell, but also to educate customers and make sure that everyone understands exactly what it is that they are buying. If you look at our product portfolio, BIMA as a company, in our strategy we said that we target, we develop a product portfolio that covers the individual rather than assets, for example. So we don't do car insurance. We haven't invested in agriculture insurance. What we started with was really life, hospitalization, and personal accident insurance. And what we've now done since then is that we also invested in complementary health services. So in several markets we now set up call centers with doctors that so that we can offer our customers free access to doctors. And what we see going forward is an opportunity, as smartphone penetration is increasing, to add on top of insurance also health services that are easier for customers to use continuously. We see a risk with insurance product that it's something that people just buy and then don't actively use or think about, and we want to engage the customer more. And one way of doing that is through these health services that we provide. And if you look at this more mid-long term, we also see that the health services that we provide and doctors' consultation over phone enables us to build health profiles for our customer base. And if we have health profiles of our customers that are captured in the customer's handsets, in the BIMA app, then we see an opportunity to use that profile as input for the premium calculations, which basically means that customers, based on their health profile, how they live their life, can adjust the premiums and make their insurance products even more affordable. If you look at the traditional insurance industry in emerging markets, and if you generalize and look what the situation is across different regions, we see that the traditional insurers tend to target the bank population, but that is only around 10 to 15% of the total population. Whereas BIMA, where we do distribution through mobile operators, we can actually also target the unbanked population. So when we survey our customer base, we see that around 93% of our customers are living on less than $10 per day. And we also see that 95% of our customers actually buy an insurance product for the first time through BIMA. I think I already covered this, but and when it comes to agent interaction, we see long term that there is an opportunity to rather acquire our customers electronically only, so without the physical presence of an agent. But we also see that right now that require quite a lot of advertisement to actually educate customers on how the policies work and why they need it, how they pay, etc. So going forward, we see an opportunity to do more of that electronic registration and to do more advertisement. But right now, we see that the most cost-efficient structure, in our view, is to build volume through agent sales rather than advertisement. I want to show you a couple of case studies as well. The first one is from Honduras. BIMA launched in Honduras in beginning of 2014. Our our mobile operator partner at the time had an insurance product launched for more than 4 years, and they had reached less than 4,000 customers in total on that product. And then we came in, we modified the product design, we modified the payment structure, and we deployed our agent network. And since March 2014, we registered more than 600,000 customers on this product in Honduras. Another example I can share is from Ghana, where we launched our first product commercially in 2011. And today we actually provide insurance to 11% of the adult Ghanaian population, and we have actually managed to double the insurance penetration in Ghana. What's also interesting is what you see on the right side of this slide, where actually without hardly any advertisement except from a few radio slots, our partner, the mobile operator Tigo, has actually become the third best known brand when it comes to insurance. So this just again shows the potential of mobile insurance and the potential for mobile technology to completely change the landscape for insurance. I think this slide was actually shown in the previous presentation, and what you see here is basically the growth of mobile money. And I mean, the graphs look great, it's taking off, and we believe that mobile money will be the future payment channel for mobile insurance, and we invest in this payment channel. We enable customers to pay through this channel already now. However, if you want to really increase insurance penetration through mobile technology quickly, mobile money is not the solution in all markets. There are some markets, for example, Kenya, Tanzania, it's starting to happen in Uganda, and a few other markets, where you see that the actual usage of mobile money is really high, meaning that people transact several days a month, people starting to save in their mobile money account. They don't just use it for transfers or for cash in or cash out. And that's great, that is happening. But if you want to increase the insurance penetration across all markets, it's actually mobile airtime that is the only viable payment channel today. When you look at mobile money numbers, you often look at registered customers, but that doesn't mean that they actively transact and use the service. So this is picking up. And we see again, some markets are doing great when it comes to mobile money. But if you really want to completely change the insurance penetration, it's actually mobile airtime that is the only viable payment channel today. Cash, of course, as well, but that's something that we all know is a very expensive and difficult payment collection method. Also wanted to mention a few things on product design and what, in our view, is absolute key if you want to develop a successful mobile microinsurance product. I think the first point here is that you need to minimize the number of exclusions to make the policy easy to understand for the customer. I think for now, when it's still early stage and people are first educated by insurance, I think it's also important to have one price for all, to not work with too complex pricing model that will create a lot of confusion. I think you should also be careful when it comes to offer different cover levels, that you don't make, again, the products too complex. And then finally, if you want to really reach scale, you can't rely, except from a few countries, you can't rely on mobile money. You need to be able to collect premium through airtime, through postpaid payments, and also mobile money. When it comes to the sales process, there are also a few things that is needed to reach scale. One of them is that you can't have any health examinations up front. that makes the sales process too long, too complex. Customers will drop off, or it will take too long to go through the sales process. You can't have any ID checks as well. That ruins the volume. But what you can do is to put the responsibility on the customer to say that you need to provide accurate information, and you need to confirm that to the best of your belief you are actually in good health, and confirm that you provided accurate information. And then you just need to explain to the customer that if you don't provide the right information, you can still buy the policy, you can still pay for the policy, but you won't be able to make a claim. So then up to the customer to be honest, and it's up to company providing the product explain that you will only benefit from the product if you've been honest through the registration process. And finally, when it comes to the sales process, it's absolutely key that in the country where you sell the product, there is regulatory, from a regulatory perspective, allowed to do electronic registration and confirmation. Otherwise, I think if you have to include paperwork, you won't be able to reach scale for mobile insurance. So, in summary, in my view, what is needed for companies like BIMA and Microensure to expand into new markets, especially also here in Latin America, is to make sure that regulators allow, first of all, electronic registration, and second of all, payment collection, not only through mobile money, but also through postpaid and through mobile airtime. If we can get that, then I'm sure that can at least speak for BIMA. We will definitely invest in many more markets, and we're confident that we can significantly change the insurance penetration in these markets. Slightly ahead of time, but I'm down there. So do I hand over to Peter?
Yes, I think if we have that would be more time for discussion. So I think that's good. Thank you.
Thank you.
Muchas gracias.
We will now continue with a presentation by Mr. Peter Ross. He has a degree from Oxford University, from Emory University, and from Davidson University. He is currently the marketing director at Microensure. He joined Microensure in Ghana in 2010, and between 2014 and 2015, he was regional director for Africa. He is a speaker in matters related to financial technology, social entrepreneurship. Welcome, Peter.
Thank you very much, and we appreciate the chance to speak with you, to present some lessons from our experience across the world. At the moment, we do not work in Colombia, but we do hope that that will change in the short future, and we think there's a lot of potential in these markets to really grab the lessons of some other markets in Africa and Asia, and then import the items that have worked into this market as you grow the market. Is the presentation, yeah, sorry. Great, perfect. Yeah, I can do Gustaf's again. Now, I think what you'll find is that Gustaf and I have a great deal of agreement on a large majority of issues related to mobile insurance. We did build those first products together in Ghana and worked together for a couple of years. We did end up diverging our models, and I think it will be important for the assembled group to understand where we diverged and why. Thank you. But ultimately, it's for this market, this regulator, these insurance companies, these telecoms to determine what will be best for the growth of the Colombian market. And so we're happy to participate in that conversation. So Microensure is, in a way similar to BIMA, an expert in mass market insurance. So we design, develop, implement, and operate a range of insurance products for the emerging consumer. And we do that through mobile channels, but also through banks, MFIs, and other channels. So I won't really cover a lot of the same ground that Gustaf covered. Hopefully I'll be able to draw some contrasts and identify some areas of discussion for this group, because I know that you're thinking, how do you get to these millions of customers? How do you sort of just do away with exclusions? How do you get rid of paperwork, identification? How do you do this? I think it's important that we dive into that and really become specific. So Microensure was founded in 2002. We were funded in 2007 by the Gates Foundation and then became a for-profit social enterprise in 2012. Our investors are AXA, the International Finance Corporation, the Omidyar Network. Pierre Omidyar is the founder of eBay, and Sanlam, which is an insurer in South Africa. We have 42 million registered customers in Africa and Asia, and 85% of our customers are new to insurance. We do have a large book of business in banks and microfinance institutions, so 90 banks, 14 mobile network partners, 70 insurers. We do a range of risks, and we've won some awards which no one cares about. So as the GSMA presentation elucidated, there is this massive growth in mobile insurance. You've seen that. So again, I think all of you are probably sick of these charts that just only go up and to the right, but that's one more chart. I think that's the last one I'll show, though, so that's the only good thing I have to say. So on our side, we recently had a large partnership with Airtel Africa in a range of countries. We launched eight countries in a 12-month period and added 8 million customers in that period. So very rapid growth, high scale, a range of countries. I don't ever want to do it again. It's extremely difficult to set up companies and hire auditors and employees and much less grow the customer base in this way. But I think what Gustaf has shown and what I hope to show is that it's possible. It really is possible for us to grow this market in a substantial way. And I know it sounds a bit like a motivational speech to say this, but I do believe that the start of the growth of this market in Colombia is for the insurance market to believe that it's possible. And so, I think that we in insurance think, risk is bad. We want to avoid risk. Innovation is risky. I think we should flip that on its head and look at what's the cost as an insurance industry of not innovating. What is the cost to us as insurers if we say, you know what, the money's too good now, I don't have to try very hard, I just like my lane, and I think if we try to fall apart. I think the reality is that, in the insurance space, if insurers don't realize that in the future they'll be unable to hide behind capital barriers, actuarial complexity, and captive markets, ultimately someone's going to figure out those challenges and we'll all be left without an industry. I think Gustaf and I very much hope that we're on the other side of that disruption, but I think that if essentially the two of us in the companies that we've built can grow to 60 million customers in a span of 5 years, there's something coming, guys. I mean, it's coming. Whether the markets are ready for it or not, it's coming. And I think that what we like to do is to partner with industries to help shepherd older models into newer models and kind of avoid the Uberization of insurance, which is leading to a lot of challenges for existing industries. I think it's possible now in insurance to get ahead of this curve. But if we don't recognize that this is coming, I think we'll be left behind. In the GSMA presentation, there was the figure of 30 million mobile insurance accounts as of June 2015. I'm glad to announce that our product with Telenor India, called Suraksha, was able to add 20 million more accounts between October of 2015 and March of 2016. And so the growth, again, is just rapid. Now, this is India. India's its own thing. But, again, this is just another example of the growth, opportunity in this space. And as Gustaf mentioned, there's no documentation, no medical exam, no age limit, no exclusions. This is a wide open product. But look, from a risk perspective, from a prudential perspective, if you have 20 million customers and the term of risk is 1 month and the average sum assured is about $200, this is an actuary's dream, right? This is literally eliminating risk in a way through scale and using the law of large numbers to its full potential. That's what mobile insurance can really do. And so that's why underwriters, I think, are a bit in the background on these models and marketers are more on the front foot. These models are working, frankly, because we copied other industries like Coca-Cola and mobile money and others that grew to scale and didn't let our actuaries run the show. Now, we love actuaries, we need actuaries. But the reality is, marketing can't follow the actuary into the market. If they do, they will lose. The marketer who knows how to connect with the customer and lead to the next phase of growth will win in this industry as in any other industry. And so the actuaries are required to make sure that everything makes sense. But again, it doesn't take a rocket scientist to imagine that 20 million customers, 1 month of risk, $200 sum assured is not an extremely risky market. Speaking of which, when Gustaf and I first did this model in Ghana, I had just come from business school in the US. And my business school was funded by a small company in my hometown, which was a beverage company. And I thought there were a lot of lessons to learn from this company. So this company started a long time ago, and their first year of operations, they only sold 9 beverages a day. And the founder thought, you know, my drink is really great. When I give it to friends and family, they love this drink. But somehow, when I put it on a shelf, no one wants to buy the drink. Wonder why that is. And then he stepped back and thought, you know, actually, my drink looks like dirty water. It's brown water. No wonder no one wants to buy this thing. And so what he said was, you know, I know that I'm not going to get people to pay for this right now because it looks like brown water. But I know if I give them a taste, they'll buy it tomorrow. And for 20 years, he built his company on the basis of try it free once and you can keep buying later on. And 120 years later, Coca-Cola is doing pretty well. So all we're doing by this model, which is freemium, is following Coke by more than a century. That's exactly what we're doing. So, you know, I think as long as we can do that in prudent ways, there really are growth opportunities for all of us. Our value proposition is essentially that there's a front office partner, which is the telecom or the bank. There is a risk carrier, the insurance company, the reinsurer, and then we perform the back office. And so within the back office, we really do 7 things, which is the products, bring to market knowledge. So we spend a lot of time in slums and villages and markets just listening to customers, listening to their day-to-day challenges. I think it's worth saying that these are not products only for the poor, but we start at the lowest level of society, because if you can make it work there, you can come up. But you can't start here for the high income population and simply take out some benefits and do things a bit different and get down to the middle income. The reality is that trust isn't just a problem with the low income market, as Gustaf said. Trust is a problem for everyone. Insurance is often the worst customer experience of anyone's consumer lifetime. How in the world, if that's the case, are we going to take over the opportunities and find the growth that we have in the future? So we've got to create a better experience, a better value proposition to get there. And so our market knowledge, we think, is essential to leveraging this opportunity. We do bring technical strengths. We have actuaries on staff. And now, with more than 80 million life years of lost data, we can probably help you with your pricing model to make sure that you don't burn. It helps when you get scale that then the actuaries have a lot more data to work with. Because I know one of the challenges of insurers in this room is, I'm worried about serving this mass market. They're risky. They have HIV. They take risky buses. Gosh, these guys are just so risky. I would posit to you that the very fact that the low-income market faces risk is the same reason why they are the ideal customer base for insurance. The low-income customer does not need to be convinced that he faces risk. He knows that he faces risk. And so we actually say something quite different on the education front. We don't actually believe that consumer education is a massive problem, because millions and millions and millions of people in Latin America are the best educated people about risk in the world. All we have to do is provide them with a solution to the risks they face. So it's a bit of a different thought. A lot of insurers sit in rooms like this and say, well, we'd love to do microinsurance if only the regulator would invest in financial education. That's not the way we see it. We think that insurers rather should go and listen to customers, understand how many insurance policies they have in their lives. They have a refrigerator in the back of their kiosk in the shop that they know they can sell if things go bad. They have a loan they gave out to their brother 2 months ago, and they know they can call that loan in at any time if things get bad. They have money under the mattress. That's an insurance policy. And they have all these insurance policies to deal with risk, because risk is so fundamental in their lives. I didn't wake up this morning too worried about what was going to happen. I open the window, the beautiful montañas of Bogota are right outside my window. I'm not so worried. But if I'm down on the street level, I'm extremely worried. Will the dirty water cause my child to get sick again? Will the bus driver taking me to work wreck again like he did 2 months ago? And will I really get in trouble that time? Will my workplace, which is unsafe, continue to expose me to dangers? Will the market where my business is catch fire again like it did 5 years ago? Risk is everywhere. And so it's really shifting our mindset as an industry to understand what's faced by these customers. We do focus on customer value there at the bottom quite a bit. That's actually, I think, the foundation. That's why it's at the bottom of our value proposition. We bring speed, efficiency, and agility. We've launched more than 250 products, and when you work with a telecom and you reach scale, you have to end up changing it. You tweak this, you tweak that, you try to find the perfect fit. You can't simply say, well, this product worked in Ghana, let's come to Colombia and launch the same thing. It doesn't work. You've got to be open and listen and be flexible. High volume systems and robust operations are the other two parts of our value proposition. I want to focus a bit on suave products, innovative products, which is just that one item at the top of my value proposition. This is somewhat like what Gustaf had shared. Our idea is that insurance should be explainable in full in 1 minute or less. If you can do that, you can get beyond the myth that insurers tell ourselves that insurance is sold, not bought. Our digital distribution model proves that people will buy insurance, they will come for it, you don't always have to sell it to them. And we'll go into that in a bit more detail. Insurance can be exciting to the customer base. I've had customers on their knees praying, thanking God for our company. And I'm like, it's life insurance, man, But he says, look, you don't understand, life insurance is not accessible to people like me. It's only for you people. And now all you're saying is I talk on my phone and I get life insurance, which is a rich person's product. This is a godsend to me. This is the blessing of God in my life. Now, when customers start using religion to describe your products, you're doing something right. So these are the features that we focus on in terms of our product design. Our mobile insurance history is, we started out back in 2010 with what eventually became BIMA, and went through a series of processes to get to where we are now with Airtel and Telenor. We ended our involvement in 2013. Our early initiatives in mobile insurance really didn't quite hit the nail on the head. And I think some reasons why that happened were that we didn't add enough value to defend our position. And also, we relied a lot on the telecom, and telecoms are volatile. The priorities this month are different than the priorities next month. So we have to create a more durable long-term contracting structure. Has to be a balance between high touch and low touch. We started with the agent model. In fact, I trained the first 100 agents of BIMA back in Ghana, and I think back then I started to have some real questions about the viability of agents in terms of what you could do long term. My analysis is that 78% of the premium of agent-led models goes to pay for the agent, which in our view is too high. It leads too little value to the consumer. And at Microensure, we're very proud to have paid more than $40 million in claims, which is more than 10 times our next competitor. And I think that we do that because we place the value in the product itself as opposed to in the sales process. And we find that customers are very well educated. Essentially, the risk of an agent-led model is that customers are extremely well educated on a product where they can never claim, like personal accident insurance. And you end up with 1 million customers in a market and two claims, 3 claims, 4 claims, which in our view is not sufficient customer value. Product value and customer throughput, in our view, are keys to viability. So what the market has learned on mobile insurance is, there's this common saying that no one wakes up in the morning wanting to buy insurance. That doesn't change just because you put it on a billboard with a telecom. Mass market customers still don't wake up in the morning wanting to buy insurance, but they do wake up every single day worried about risk. And so when they see a solution, they go for it. It is worth saying that the mobile channel is not a quick fix. It can make a bad product worse. I lived in Kenya for the last 4 years, and there are more than 50 mobile insurance products that have been launched in Kenya. Only 5 or 6 still survive because all the insurer did was to take their existing products with 30 pages of contracts and all these kinds of exclusions and terms and simply dump it onto a mobile phone. It doesn't work. In fact, there was one of the best examples was a huge launch of a big program in Kenya, and they said, oh, it's a huge mobile insurance product. and you dialed the short code, *123, and it said, "Thank you for your interest. Please visit one of our agents." I mean, what's the point of the phone in that case, you know? If the customer simply, you know, it actually adds time to them, it wastes their time. We do identify, though, that mobile involves systemic risk. So when products fail in mobile insurance, they can really risk the entire market. It's worth saying, because if the regulator doesn't identify how to mitigate this risk, if Colombia suddenly adds 4 million or 5 million mobile insurance customers, then it all falls apart, what happens? Because these mobile operators are powerful, they have a lot of money, they have a lot of influence, and they're volatile. And so you've got to think about that from a regulatory perspective. It's a very important piece of the pie. It's also worth saying that customers expect mobile insurance to work like other mobile products, like ringtones and web settings, not like other insurance products, primarily because they don't really know other insurance products. And finally, we've learned that freemium is hard. It's hard to do, but it's clearly a better model in terms of scale and viability and product value. Now, freemium, which is primarily where Microensure operates, what it is and what it isn't. Oh, I'm sorry, and one other point I want to make about the GSMA presentation was that a lot of our loyalty models are on that graph that's kind of heavy to the left, but every single one of our loyalty model is a freemium model that just hasn't gotten there yet. So I think that it's worth saying that loyalty is not a long-term solution. Loyalty only ever leads to sustainability and viability long-term if it becomes freemium. So for us, freemium is scalable, replicable, etc. It is not charity. So this is not about an NGO play to be nice to poor people. This is about how to introduce underserved customers to a new opportunity to have insurance. It's also not credit card insurance. So I think that mobile insurance is frankly calling our industry to account. It's not good to drop your props. So I've got in my wallet 8 credit cards, 7 credit cards. I'm American, it's what we do. I've probably got 40 insurance policies, maybe 50, I don't know, on these credit cards. I have no idea what they cover. I have no idea how to claim. And in fact, I've called a few of the companies and asked, how do I claim on this? What am I paying in fees? And they couldn't tell me, nor could they direct me to anyone who could. If you can't tell me how much premium I'm paying, what cover I'm getting, and how to claim, that's not insurance, that's theft. You know, so I truly believe that we need to get away from this free money model in our industry and expect it to work for what we make. If we can't do that, we're going to be disrupted by someone else. Our view here is that embedded products, the loyalty products, the free products, lead to paid uptake because you create this massive base of customers that are aware of insurance and how it works, and then they're ready when you come back to them in 6 months and say, would you like to pay a bit more for that great cover you've been enjoying? By the way, here are all these people that have claimed and seen benefits, and they can tell you how easy it is. What about $1 a month? What about $2 a month? The uptake there we found is much, much higher and lower cost to roll out than paid products from the start. This is just a theoretical model, but it shows you how we view things. So Gustaf very kindly shared the Tigo-Ghana model, which we worked on together, and which then became BIMA's primary model of using agents. One way to see the like-for-like comparison of an agent-led model, like that one, and a digital-led model like the ones we offer, is that for the same price point, the customer gets life insurance on the agent-led model. On our price point, the customer gets life insurance to a higher amount, accident insurance, and hospital cash insurance, all for the same price point. And so we essentially can just put more product value into the cover for what you're paying, as opposed to the customer essentially paying for an agent. The value chain is essentially that Airtel, the mobile network operator, markets the product, the insurance company bears the risk, and we do most of everything else. But a few insights after 1 year. We had 1,000% increase in claims over our agent-led model that we also built together with BIMA after 1 year. We had a 450% increase in policy volumes and an 80% reduction in the expense that we took as a technical service provider. So overall, we think that this product had quite a bit more in terms of results than the agent-led limited value model that we launched previously. I won't spend much time on this claims model, but I do think it's important to identify how we differ from a typical insurance claims process. So typical claims experience is at the top, mobile insurance is at the bottom, and I want to take you through the stages of a claim. So primarily the loss is incurred, And there's a length of time from when the loss is incurred to when the first claim report is given, either in person or over the phone or some way. In a typical claims experience, I think our model is that it usually takes about 10 to 15 days for the customer to kind of get over the loss, obviously, to gather his or her paperwork, to kind of figure out what to do with it. Maybe, I mean to visit the insurance claims office, but I can't do it yet, and then they kind of eventually go. In our process, it takes 1 to 2 days because the customer is a lot more dependent on the claim payment, and they're more easily aware of how to claim because it's simply one phone number. We don't tell them prepare these documents. We say call this number. That's it. So it's a much more straightforward method of communication. Then from the first claim report to when all the claim documents are finally received, and this is actually where it doesn't look good on us as an industry, is like 40 days. Customer says I have a claim, but it takes about a month, month and a half for all the documents to finally get with the underwriter to say yes, this claim is valid and pay the claim. In our case, it's 3 to 5 days, and we do that because we proactively follow up with the claimant saying, hey, you called me last week, let me help you with these documents, let me help you with these documents, let me help you with these documents. It might sound strange to insurers in the room that we help people make claims, but claims are our marketing tool. Also, by getting out in front of the claims, we actually end up reducing fraud. And I can talk about that probably on a whole other 30-minute session of how we do that. How you're easy to do business with and at the same time reduce fraud. It's a very important dynamic in mobile insurance. But so essentially then we see less than a week when the claim documents finally come in. Then is this, documents received, claim is paid. Standard in most industries is 72 hours. In some places it's 48 hours. That's fine. There's no problem with that time period. We can do a 1 to 2 hour payment, but that's something probably for a discussion later on. But what you see here is that it's 50 to 70 days in a typical claim process from the loss to the money. One thing I'll add to this, having watched hundreds of claims kind of in person with claimants, is that mass market customers give up during this process. They're intimidated by people like us with suits and ties. They know they don't speak our language. They know they can't understand legal language, financial language. So they often give up. Now, we like that from an underwriting perspective because it makes us more money, right? We won't admit it, but it's the truth. Our view is that if we turn that on its head and say, let's make it easy, make it fast for people to make claims, there's a massive community impact. If a rural widow in the jungle loses her husband on a Monday and gets money from the telecom on the Friday, her entire community will sign up for that policy. I know that because we've seen chiefs, Gustaf and I have both seen chiefs hire coaches for their entire community and take a coach to the nearest place to sign up for the insurance product. It drives massive uptake in trust and value. I don't know if this video will work, and if it doesn't, that's fine because I'm almost out of time. But this is, Gustaf mentioned marketing.
Hi, my name is Hafiz Baba. I'm a teacher. I was listening to the news one day and I heard about Airtel insurance. So quickly, I dialed *580# to register immediately. 2 months after that, I suffered chest pains and I collapsed. I was rushed to the hospital. After I was discharged, I dialed 580 to get in touch with them. 2 hours. Just like that. I couldn't even believe that Airtel could do such a thing for their wonderful customers. So I tell you, this is not just a fabrication. Don't just use Airtel, but benefit from Airtel.
It has never been this easy to get insured. Just top up 5 Ghana cedis a month and qualify to get life, accident and hospital insurance up to 2,500 Ghana cedis. Dial *580# now to register for Airtel insurance for free. Airtel.
So Airtel pays for that marketing for me because they benefit from customer loyalty and revenue. So that's how we essentially overcome the marketing challenge, is to have the telecom pay for us. So on the discussion on mobile insurance, and I've just got a couple of minutes left, where we all agree is that freemium products do create value via ARPU and churn, but the telecom willingness to pay has its limits. Telecoms are not going to pay for free insurance forever, which is why you have to transition from a free product to a paid upsell. Other things that we haven't addressed on this list, as Gustaf said, mobile money premium payments are not a panacea. Just because you have mobile money infrastructure does not suddenly increase uptake. As he mentioned, they've got about 20 million customers on the 1 billion market size that they have on their telecoms, which is 2% penetration of that customer base. So just because the rails are there doesn't mean you can easily ride the rails. Room for debate, though, and this is where I think it'd be very interesting to talk, is does free insurance create lasting value? We believe yes, others believe maybe, others believe definitely not. We should talk about that. Does product value matter? You know, we have a policy as a company of not ever excluding HIV. We have a policy as a company of not ever launching exclusively difficult to claim accidental disability products. You know, we want to push product value. Does that matter? Do claims matter? Where is the value? Is the value in underwriting profit or in telecom stroke policyholder value? Essentially, is this a way for us all to just make a lot of free money, like on the credit card insurance? Or is it that we have to drive client value and can make money that way? High touch or low touch sales, of course, is primarily what we're talking about today. Should mobile insurers work with regulators to mitigate systemic risk? Our answer is absolutely yes. And if we work together, so one of the things we do at Microensure is we report every month to our regulator partners how things are going. Good, bad, indifferent. We think that it's useful for us to share with you what's working well and what's not, because we're all learning. It's all a growing market. Are insurers sufficiently involved in mobile insurance? And what's the appropriate role for technical service providers? Finally, will telecoms integrate backward? Will telecoms start taking over mobile insurance? It's a very interesting discussion. I think it's worth thinking about. So freemium insurance moving forward is to move from this 3 for free product we do to paying for more and more covers. There's obviously a trade-off on reach and product understanding between field agent and SMS. We found that the ideal sweet spot for us is in the call center. So you can be efficient, you can call through a list, you get a lot more throughput, but you also get this customer interface. And we're doing a lot of that through what's called interactive voice response, or IVR, and getting essentially a voice to explain to a customer, even though it's an automated voice. I don't think we have time for this. We need to move on, but I think that essentially this is a very healthy debate. It's still very early in the process. Latin America is kind of learning from the rest of the world, and I personally believe that Latin America has a chance to exploit a second mover advantage. Having seen what's worked and not worked in Africa and Asia, I think Latin America and Colombia specifically can now develop a model that is suited to purpose for this market. Thank you very much for the chance to be here.
Let's open the debate first inside the panel. I think we still have a few moments, and then we'll leave a few minutes at the end for the questions from the audience. Part of the things that I was looking into when reviewing both companies in their websites were precisely the markets where your companies are present. And except Brazil, that has joined a bit later, there is a difference in the GDP per capita of the market that are being addressed by BIMA and Microensure. And in the case of Latin America in general, the countries of our continent that are in the list, in any case, have a GDP per capita lower than the Colombian case. And part what I want to say is that Gustaf and Peter can tell us how or what would be the key point of adjustment with respect to the models that have been developed. Because in the case of mobile transaction, I think that part of the things that we have learned, and this is a lesson that I have learned from Beatriz Marulanda, is that in the experience of the African countries, different problems were being solved compared to the ones that Colombia would solve when facing its financial inclusion policy. So the idea that come to regulators, to people who participate in forums, sounds tempting, but the reality is that these are different environment, and I would like to hear from our two panel members whether what kind of differences do they see of what, or how could be an adjustment on adaptation of the model that have been developed in Asia, Africa, and even in some countries of South America compared to Colombia. And we may start with Gustaf.
Like if the GDP difference, per capita differences, give some room for adaptability, and what should be the key points there?
Yeah. I think as I showed earlier in my presentation, we have already launched markets here in Latin America. So we are right now in Honduras and Paraguay, and also in Haiti in the Caribbean, and we have a pilot in Brazil. So these markets, if you look at GDP per capita, of course, higher than some of the African and Asian markets where we operate. But for us, when it comes to making it work, it's in many cases actually a bit easier if the GDP is slightly higher, because you can basically charge the customers slightly more and also give slightly more in insurance cover, and that basically improves the financials for all involved parties. So I think as long as we have a mobile operator involved that can accept an acceptable revenue share, and we get the circumstances right in terms of electronic registration and payment collection, I think we have already proven that that we can make it work here in Latin America. And I think what I also wanted to respond to in terms of Peter's comment earlier, I mean, he mentioned a few numbers that we would pay more than 70% of the premium to our agents, and that's not at all the case today. When we first launched, of course, if you build a customer base and invest in that education of each customer, securing that people understand exactly what they buy and they get education around insurance. I fully agree with Peter that you don't have to tell them that you face a lot of risk. That's something they know. But still, to avoid disappointments or issues later on during claims processes, etc., you need to explain how the products work and what you can claim for. And of course, that investment, it costs money. And if you look at it short term, if you take, for example, a customer that is subscribed and then pay premium for just 4 months and drop off the product, yeah, then a very, very big share of that premium goes back to the agent in terms of acquisition cost. But the goal here is to get customers on board that stay with the product for a very long time. And if you look at the case long term and the premium that customer is paying, it becomes a very, very small share in the end that is actually paid to the agent. So having said that, I think that we believe that our model is already working in Latin America, and we believe we can definitely expand to more markets.
Peter, do you see some point of adaptability to higher income countries, or it's?
Yeah, absolutely. I think that I agree fully with Gustaf on this. And by the way, Gustaf and I have a very good relationship of sparring and having fun. We've been in forests and ravines together for many years, so we have this good history. So we both give as well as we take. But I do think that as for higher income markets, we look heavily at the Gini coefficient of sort of inequality in a market. Yeah. And I would argue that although yes, GDP is higher in this market, there are still tens of millions in this region of Latin America of customers that today will never see an insurance policy. And our view is that whether they are at $2 a day, $5 a day, $15 a day, $25 a day, that if they're underserved, there's someone that I'm interested in developing a model to serve. And the reality is that someone making $25 a day is still not going to be well suited.
Quisiera ir un paso más allá, y es si la diferencia en PIB per cápita es relevante para el cliente, y la respuesta de nuestros panelistas es no, entre otras cosas porque evidentemente en el caso colombiano, sobre todo con un PIB per cápita alto, seguimos teniendo alrededor del 10º peor índice de distribución del ingreso del planeta, Tierra, todo, del mundo mundial. En cuyo caso concuerdo, intuitivamente me parece razonable pensar que los clientes están presentes. Pero quisiera preguntarles qué pasa con la industria. Si la industria no tiene una forma de pensar distinta por el hecho de estar presente en un país de un PIB per cápita más alto, y si no hay un trabajo distinto que hacer en moldearlos. I'm just saying that I'm going a little bit further. It's evident for me that you're telling me it's not in the client base, but what about the industry? Do industries think different just because they're present in a market in which there has probably been, I'm just going to call it that way, easier revenue flows because of the nature, and we're going to switch orders just to Peter.
Sure. So I'm interested to hear what Gustaf says on this point, but I don't know that an African or Asian insurer thinks very differently about its traditional customer base than a Latin American insurer does. It's people in this room, it's professionals, it's employed workers who can have group contracts. This is the model for traditional insurance worldwide in the United States, everywhere else. And so the reality is in Africa with smaller populations of rich customers, there are simply fewer insured people. It's not that insurers there have really figured out how to serve the bottom of the market, they haven't. I think that's the same worldwide. And what's interesting is that Gustaf and I are both being pulled into conversations in Europe, in the United States, about how to deal with low-income insurance in those markets. This is a problem worldwide for low-income people, regardless of how you look at GDP figures.
And I think that what will happen is now that as we have these success cases from several markets, that we can prove that we have completely changed insurance penetration through these models, and also target the lower income segment. I think that what will happen for the more traditional insurance industry is that will not have a choice to participate or not, or a choice to determine if this will happen or not. I think what will happen is that there will be more companies like BIMA, like Microensure, not only in emerging markets, but also in more developed markets in Europe and in the US, who think different about insurance and how it can be distributed. And then there will be, just two options or basically three options for the traditional insurers. Either they will, be involved, but in the back end, just to take the risk, or they will be part of it and invest themselves. Or the third option is to kind of try to stop it, but I don't think that's actually possible, especially not when there are use cases from other markets where we see that it is working. And I think what will likely happen then is that we've seen in some emerging markets where the insurance regulators actually want more innovation and more competition in the insurance market, and therefore they look at what's stopping new players to entry, and one of the things to stop it's very high requirements in terms of paid up capital to be an insurer, and then instead you launch microinsurance licenses, where you can have paid up capital requirements of a couple of $100,000 instead of $20 million. And then there will be companies that maybe not coming from the traditional underwriting side, like BIMA, for example, where we see that, okay, but we know how to do it, just that we don't have the license, but maybe there's an opportunity for us then to get the license. So I think one of those three things will happen, but that just the insurance industry will stay as it has been in the past. I don't really see that as an option, not in any market, actually.
Bueno, a mí me encanta.
I will gather the conclusion that it's going to work also here, and if we don't have a transformation, the advance of the industry in the world is either we are with them or we're not with them, because of course then the rule of the game will change, and the change is occurring even more rapidly than we perceive. So I move to a different question, trying to covering the different agents that will be involved in the process of innovation, and that is, do we see some regulatory obvious or common barrier And I'll take advantage of the fact that I have the microphone. Maybe now that you were asking Jose Ramiro what he referred to the absence of the fact that Colombia showed in red in his graph. I would to add some color to Jose Ramiro said before. First of all, in this case of mobile money, we don't have any. Are we losing this? Are we losing sound? No. I'm doing my best effort to. Are we ready with the microphone? We're having problems with the microphone. There's some interview. Can you hear me? In the back, we're changing microphone. And now, yes. In the case of the regulatory environment, there are some reflections that seem to me important, even for the question. Many times we think about financial regulation. That is typically the guilty barrier in this kind of discussion between industry and regulator in terms of why innovation processes have not occurred. In the Colombian case, not only do we not have a regulation, strong regulation in place, we do not know whether what we did is rightly adjusted, because we, public officials, have extraordinary capacity of working and willingness to make this happen. But if we were entrepreneurs, we would not be public officials. Therefore, we create a regulation with the best intention, but until we have an agent operating, we do not know whether if we actually did things right or not. And apart from that, as regulator, a lesson that I hope I have learned is that it's virtually impossible to score 100 on the first exam. In other words, the first way this regulation comes out will necessarily require adjustment. If otherwise something would be wrong, because literally the regulation itself must gather the experiences of the regulated party in order to reach its optimum. Its optimum is a service for the client. When the regulatory barriers protect so much the customer and that doesn't give the service, it means that we did not do the job. Our job is that the welfare of the community is increased to the provision of these financial services. And where am I pointing at? In the case of mobile money, for example, the tax issue is a key. There is no financial regulation. It's not in the hand of the financial regulator. And however, if we don't have an alternative option to what it is, the transition from simplified tax system to common system, then the shop tender would not receive, and we have done a great work in terms of supply, but there will be no demand. To the extent that public utilities do not accept the discussion once the automatic debt has been created on my invoice, so I cannot forecast and I restrict the use of a service that is very powerful when you have access to it. And this because there is a regulatory barrier, but understanding that we're not always talking about financial regulation. Sometimes sometimes this barrier has achieved its purpose, but let's say that typical demand is affected by many other incentives that sometimes are difficult to see.
For you guys, is there any obvious regulatory barrier that you have found? Is there a commonality in that discussion? I'm sorry if I'm confusing you. Is there a commonality in there's one barrier that you typically found in these countries or not, or is there any obvious discussion that you should have with the regulator ex ante?
Yeah, I think I will repeat what I mentioned in my presentation. I think there are again, we're convinced that we can make the model work in all countries, and I think in many of them there are mobile operators that are interested in providing these products. And what is absolute key, in my view, to make this work is electronic registration. So there should be acceptable that a customer has sent an SMS confirming that they want to subscribe for a product, or that you have made the sale through a call center and the sale has been recorded. Those two should be allowed. Then you can reach scale through electronic registration, independently if it's a conversation between the customer and an agent, or if it's just opt-in through SMS or USSD menu. But you need to allow that electronic registration. If that is not there, I don't think we're going to be able to be successful with mobile insurance in the market. And the second thing is, again, on payment channels. We really need to look into the numbers. Even if mobile money is growing and it's doing fantastic in some countries, that's not the case in all countries. And we have to look at numbers, not only registered subscriber, but also active subscriber. And out of active subscribers, are customers actually used to making payment through this channel? Do they keep a balance in the wallet so that they can make payments? And in many cases, that's not how people behave yet. It will come, but there are several years left. And in those cases, we need to allow for other mobile payment channels, which is airtime, so deduction from the airtime wallet, and payment through the postpaid bill. If we can get that combined with allow foreign companies like BIMA and Microensure to come in and set up an entity and invest in the market, then I think we have the fundamental we have basically what we need to completely change the insurance penetration in the market.
Okay. Peter, is there any marginal barrier that you want to?
Yeah, the one point I would add is that we strongly support what's called a living will for freemium insurance products. The German development agency GIZ has done quite a bit of work on laying out, they have a paper called Responsible Mobile Insurance, and they lay out how to deal with these dynamics of mobile network operators and their leverage in these transactions in order to ensure that there are replacements for, say, free insurance products if the mobile network operator chooses to go a different direction. So these principles are laid out in literature, and so I won't go over them, but I do think that if regulators get involved, one of the fears of regulators is, how do we control the mobile network operator? And I think that you've got to jump in and you've got to lay out, probably through contract enforcement, so service level agreements with the insurance company. The regulator can enforce that this insurance company has agreed to an ongoing value proposition for this product, in order to ensure that that the products don't die on the vine. So our view is that the regulator can work through the insurance company, but ensure that the insurance company has appropriately contracted the telecom, and that the insurance company isn't just so wide-eyed about, wow, we get to work with the telecom, that they've avoided prudential controls. I want to say something else though about can this work in Colombia or in Latin America, given the kind of different regulatory frameworks in Africa. And I want to say something a bit controversial, which is that I actually believe that Latin America has the seeds of the greatest success in financial inclusion and insurance of anywhere in the world. Because in Africa, people, and I would say this with a half African audience, by the way, I lived there for 6 years, the dignity of the poor is not a value in Africa to the extent that it is in Latin America. There is no debate here whether or not those who are lower income are still valid members of society. Of course they are in Latin America. However, I've been through insurer after insurer in Africa talking about how the poor are just terrible customers. I don't want to have to work with them. In fact, I rose to this level of prominence so I don't have to work with these poor people anymore. I don't even work with my own nannies and housekeepers because they're just these dirty poor people. That would never be said in Colombia or in Latin America. And so potentially, the opportunity here is for the insurance industry to follow the church. Para usar las palabras de Gustavo Gutiérrez, el teólogo.
God as a differential option for the poor, and so why not give an option to the poor population? 2 minutos sobre asociaciones. Ustedes hablaron de asociaciones, partnership. I feel that the financial industry, I'm not talking about insurance particularly, have created heavier models with this all-in-one post shop. But what I've seen in the two presentations was the idea that yes, the partnership work and leverage.
2 minutes apart. I think what's absolute key in a partnership, first of all, is, and I think that's been mentioned, that whatever you design in terms of a product to start with and whatever it's planned for next, everyone needs to be 100% committed to do this long term. I think if we have a mobile operator or an insurance company or a provider like BIMA or Microensure that's just in it to without fully understanding where we're heading in long term, I think that there we have a problem. We have also launched the free products in several markets, and we've seen that over time mobile operators require direct revenue. Otherwise, there's a risk that the product is not sustainable. So in the partnership, I think everyone needs to map out from the beginning what is it that we're launching first and what is the following product. We've seen that there are risks there if you don't launch products that are generating revenue for the mobile operator from the beginning. So therefore, we have in many markets started with a product where a customer is paying to secure that it's sustainable long term. But then I think we also need to, from the beginning, look through the financials of the business model, and not only that every party is doing it for themselves. I think if we launch a product with a revenue share model or underwriting profit share model with a mobile operator and the insurance company that is not sustainable for one of them, then we know that we jeopardize the whole business model. And the same thing if there's an insurance company that tries to push down the compensation for someone like BIMA and Microensure, and are excluded from the equation, then it also falls apart. So I think to not only when we build the case from the beginning or plan for the loan, think about what works for me as a mobile operator or an insurance company or someone like BIMA, but what works for everyone. That has to be done, and then also that all parties agreed on what is it that we're going to launch and what is the evolution of these products and what will the commercial model look like. If you just get that lined and documented, I think and we're fine.
Yeah, I'll agree with everything Gustaf said and just add one more point, which is that in our experience, insurers are often overconfident in the capabilities they can deliver. And what I like to say is that we don't go into your traditional market. Neither of us offers auto insurance. Neither of us offers, sustained employee benefits products to compete with existing insurance offers. We are not serving your market. So in a way, you're welcome to try to serve ours, but at the same time, realize that the two guys on this stage have built probably 3/4 of the mobile insurance opportunities in the world in the last 5 years. So either we're just a lot smarter than everyone else, which we're not, or there's something unique about what we do that isn't exactly the same as what traditional insurance companies do. And it's worth saying, every intermediary isn't just an increase in cost. Intermediaries that are specialists like BIMA and Microensure can really drive value in a way that leads to higher profitability for the telecoms, for the insurance companies. It's not about making less money for insurers, it's about making more money through partnership. And so I think a lot of times insurers will sit across from us and say, oh, you're a broker, just get out, or we'll find a way to get you out over time. And then I think what's been interesting in our case is that AXA and Sanlam have ended up investing in us because AXA, as big as they are, with 1.7 trillion in assets, identified we don't have the capabilities globally with 140 countries and 80,000 employees to do what these guys do. So we should partner instead of losing out altogether.
I'm going to open the session before we close for questions by the audience. I don't know whether somebody may give the microphone to the person who wants to ask a question.
Hi, I'm Rupali. I run an organization called Resilience Design Labs based out of India and Silicon Valley. So very excited to hear both Peter and Gustaf. We did a lot of work with banking correspondents in India, the largest banking correspondent, and tried to offer insurance products. And the biggest challenge that we faced was about 30% of the agents kept changing. And I know of this because I know that Richard was trying to enter India, and that was one of the biggest challenge. So this is in some sense a question going back to the core of what both of you presented. Gustaf, I know this is a leaky cauldron when you pay agents and there's 30% turnover. And this is not just for India. We've seen models in South Africa. Agents hunt for they'll sell chewing gum instead of insurance. So when you spend so much money upfront for a long-term client, do you really see that making sense?
I think, first of all, I think there are ways to build like either a call center or distribution networks in the field with much lower churn than that for agents. In the beginning, it's very likely that you have high agent churn, but over time, I think that, or can I ask you, did you refer to churn of customers or actual agents? Agents, yeah. But over time, I think that what you can do is that you can get a core of your agents that are actually loyal to you. And yes, I agree, in many companies there are salespeople who move to a competitor to sell gum instead of insurance just because they get $1 more paid. But I think there also you have a responsibility as a company, or you have an opportunity as a company to create a company culture, to do more for your employees, to show that you have an opportunity. You do sales well, you become a team leader, then you can become a supervisor, you can move to another country and work there. So it's just about changing the mindset about what is this position, what is my opportunity in this company. So that's one thing. And the second thing I want to say is that when we do mobile insurance and you have subscription models, I mean, yeah, you invest a bit up front in an agent, you train them, etc., and that's a loss if they leave after 2 months. But the customer can still be with you. It's not like more traditional insurance where you say that, okay, the agent more or less have their own customer base, but the customer has to come to them to renew and pay, or so that if the agent is leaving, he will bring that customer base to the competitor. But mobile insurance doesn't really work that way. The agent's role is to educate the customer, make them understand, but they don't necessarily need to build personal relationship where it's that particular agent that the customer will contact in the future. So I think, yeah, you can still maintain the customer for several years, even if the agent that registered that customer is leaving shortly afterwards.
¿Tenemos alguna otra pregunta? Acá, allá adelante.
Good afternoon. Yes, it's afternoon already. The Colombian market and the massification of insurance has many players who, in my opinion, raise the cost of the product and the price for the consumer. Even though in pesos it may be apparently low, it is in fact rather high, given the number of players that participate. So excuse me if perhaps I didn't understand clearly, but BIMA Microinsurance are insurers, operators, technology providers. What are you? That's my first question. I apologize for not understanding if you are technology operators, if you are insurance companies. I know that you're not brokers. I know that. I've understood that. So that's my first observation. Just from my understanding, and again, I apologize if I got lost in your presentations. That's the first. Number two, I think it goes, another actor would come into mobile insurance, mainly the mobile operator. So given the Colombian experience, I imagine myself as an insurer, which I am, and now I have to pay, so in my premium, in the premium that the client pays for, there's a factor that goes to the mobile operator. I also have to include the cost of you guys, or the technology operators, if that's what you are. In addition, the way I see it is that there may be an insurance broker that wants to participate. In that case, I have three costs. Then I have to include marketing costs, advertising, etc. So, in your experience, the maximum percentage that makes the cost viable for the client population to be able to allow me as an insurer to reach that population of the base of the pyramid and others, how much should that be? What should that percentage be? Because to me, in my business in Colombia, it is absurd. Some operators charge 50, 60, 70% of the premium for mobile operators. An amount that could allow me to...
So on the first question, we are, I think both of us would call ourselves mobile insurance specialists, and we can be regulated in various ways. So we do not bear the risk, although BIMA bears the risk in a couple of markets. And we can set up reinsurance facilities, but we've chosen not to go that way. It kind of slows us down. And on the sales element, BIMA primarily controls the sales process, and they use the mobile network operator as the rails to collect payment and brand and customer base. But essentially, they do everything else. We do the same function, except we don't primarily market the products. We leverage the mobile network operator's marketing budget to sell the product. So slightly different marketing approaches here, but essentially the technology, the product design, the market knowledge, the actual back office operations in terms of answering the customer service calls and claims. And then for us, we both sell the upsells on the paid products. Those are the things we do that we feel that neither the insurer nor the mobile network operator is well placed to fulfill. So in terms of your question around the percentage of payment that you have to make to us, and to mobile, it is higher than a traditional insurance product because it's a completely different distribution model. These are $1 premiums. So a 20% commission just isn't going to work. I personally think that 20% is way too high on a lot of insurance transactions where the broker basically does nothing and goes and practices golf afterward. So frankly, I don't think percentages are helpful. What we find to be helpful is what is each party bringing to the table? What needs to happen to make this thing successful? And let's not assume the pie is there for us just to carve up and go and walk away and have dinner. Let's understand that there is hard work to get this market, and we do have costs to create it. And we're happy to look at those costs, but even though they're a higher percentage of the normal insurance premium as opposed to a normal insurance product, I think there's much less inefficiency in the model that BIMA and we use as opposed to a traditional brokerage or agency model.
I agree with those points. What I would also add is that I think that what you mentioned with potentially having a broker involved, that won't be necessary. As Peter said, even if you as an underwriter is involved, and if BIMA Microensure would have to be registered as a broker to do what we have to do, then we would do that. And then I would also I also want to kind of manage the underwriters' expectations on what the role is in this partnership. And I come back to my earlier point on what I think will happen long term. I think there are different options for insurance companies to participate in this going forward. And one is to really invest, as Peter said, and then you also have cost. If you, for example, participate in distribution, or if you do marketing, then you have costs, right? But if you don't do that, if you just there taking the risk in the back end, then either BIMA or BIMA together with the mobile operator or Microensure together with the mobile operator can basically take on all the cost and all the operational activities. And if that is the model, then I also don't think that the underwriters can expect to earn that much money from it. Then you just participate as an underwriter, but there will be a lower upside on that.
One final point on that is that there is, I would simply say that the opportunity for the underwriter on profit is small at the start. It can grow over time because we're creating a new insurance market. So these are customers that don't have insurance otherwise. And so we all kind of take a very thin margin at the start because there just isn't a lot of premium available from this customer base. But if we believe that there is future growth opportunity, then we all are confident that our revenue and profitability expectations can increase in the future.
Yeah. Finally, is one thing I can add is also that, at least from all our markets where we operate, there's a regulatory requirement to always, in all communication, mention the underwriter independently of their role. So if you look at a market where we over a few years will reach 10% of the population and communicate with them on a regular basis, and in each of those communications the underwriter will be mentioned, then you can imagine where will that person go if they rise in income, if they want to have something that we don't provide, for example car insurance or income protection, or a more expensive higher end life insurance, health insurance product that we don't provide. I think they're going to go to that company that they've seen in every text message or in the brochure or when speaking to the agent or in advertisement on TV. So I think that also is an upside that in a long-term partnership has an enormous value.
Bueno, lastimosamente.
Well, regrettably, you have to go to lunch, and I'm happy for you, but this was a very interesting conversation. I would like to close with one specific thing that struck me deeply, which is the way in which these two agents approach the question of financial education. Contrary to what you expect from me, who has been involved in financial inclusion for a long time, I'm not so enamored with the term financial education, because here, as in many other things, we can include everything and anything and nothing. Yes, I've said it. However, notice that the way in which, in this case, we are presented with the notion of approaching the customer by the product offer, by the insurer, is essentially the idea of managing expectations. And especially in this industry, I feel that explanation that the customer should know what it is that they're buying and understand it, not because we need to comply with a memo or whatever other memo issued by the superintendency, but rather because when the client doesn't understand something, they're going to be unhappy when they don't receive what they expected to receive or what they thought that we had promised. So if we don't have that element absolutely anchored, then we have lost sustain, because the customer is going to get furious. They're going to send us where and tell all their neighbors. And profitability, because I have a customer who didn't want to come get another product, because as they very well illustrated, that is our biggest potential. Having an educated customer and a claims payment process that is effective without many exclusions. And this may sound obvious, but I think it was worth repeating. So I'm going to end up with some marketing. I think it's interesting that if any of you want to come and talk to the speakers, come now, because I think that many of you would like to learn more deeply about their experience. So thank you and enjoy your lunch.